I guess the key question is how much more unwinding is there that needs to be done?
Fran, to our knowledge, we have not yet seen blocks offered by the likes of Nomura, although it's possible Wells Fargo was selling off some of Nomura's stock. We haven't seen Credit Suisse in the market. We heard overnight, as you know, that Mitsubishi USJ is facing loss of $300 million, not tied directly by the bank, at least, to Bill Hwang, but it's quite possible that they, too, are sitting on unsold stock. In some, Fran, there are potentially billions, maybe more than $10 billion of Bill Hwang's highly levered positions yet to hit the market. And that helps us shift the focus to exactly where we should be looking, which is to say the prime brokers. Clearly, the Bill Hwang story is fascinating. Who is this guy? Why did he leave so few footprints? And we'll continue to be asking those questions for days. But let me just posit this, Fran, and I know it's been on your mind, Matt's mind, Kaylee's mind. How could that many prime brokers, that many, we're talking about at least a half a dozen, be so dumb as to lever up one guy all on the same stocks? This is a catastrophic failure of risk management 101. That's exactly what the risk managers are supposed to avoid. And the consequences don't just apply to the bank stocks. We all saw what happened to Nomura and Credit Suisse. Look at what happened in the market. What if you were holding Viacom on Friday and the stock traded down from 66 on Thursday afternoon to 48 on Friday morning? That's serious collateral damage, and the onus for that is on the prime brokers.
What if you bought it from Viacom in the secondary at $85 and now you're looking at $45? I mean,
or you bought it on Monday before they announced the convert when it was at $100.
So real problems there. But Erik, I'm wondering if you or Sri or any of the team have talked to bankers who have said, look, Archegos is a huge problem, and I've done similarly structured trades for other family offices. I need to start clearing all of this out.
You raise an excellent question. How widely used are these total return swaps? And if we now look at a 13F filing by Morgan Stanley or by Goldman Sachs or by whichever prime broker we happen to be talking about, should we now assume that all the shares that we see in an HDS search on the Bloomberg, right, are highly levered positions? They are effectively proxies, right, for highly levered bets by other so-called high net worth individuals. It is a plausible suggestion. We just don't know.
Right.
You have to believe that regulators are now taking a very close look at this and wondering to themselves, what is it about the leverage in the market that we don't know?
Well, to that point, Erik, we know that the SEC and FINRA summoned these prime brokers to have a little chat yesterday about this blow-up. What would regulation coming out of this look like?
Transparency. So what we understand happened in the case of Bill Hwang, and as Matt points out, possibly with many other whales, is that banks used total return swaps so that the client, in this case Bill Hwang, did not have to report his economic interest in these positions. Think of it this way. He owned, what, 100 million shares of Viacom? If we had seen again on an HCS search that Archegos Capital, or however we want to pronounce it, in fact, a Greek colleague of ours told me yesterday it should be Archegos. We'll leave it at that. If we knew that he had, if everybody knew that he had 100 million shares of Viacom, would you have looked at Viacom differently on Monday, Tuesday, Wednesday, Thursday, Friday before this stock was blown out in blocks on Friday? Of course you would. You would have been asking all the obvious questions. Who is Bill Hwang? What is Archegos? What capital do they have? How highly levered are their positions? What do we know about this guy? It would have been a completely different risk management calculation, as opposed to seeing Goldman and Morgan Stanley as the holders. And so to answer your question, I think it's safe to assume, assuming is always a dangerous thing to do, but that the likely outcome of this will be more transparency in terms of reporting economic interest. So the people transacting in a stock have a better idea who the holders, who really has the economic interest, and can ask, as I say, those necessary questions. How much leverage is built into this trade?
Yeah.
And what might happen if things were to go as pear-shaped as they did last week? This is the what-if scenario that every investor is trying to guard against.